Welcome everyone to our coffee chat of the month. If you don't know me, I'm Fernanda Landigrafi. I'm a project manager here at PCMI and also the host of these coffee chats. From our side, we also have Lindsay Lear here. Lindsay is our practice leader. So Lindsay, thanks for joining.
Great to see you all.
And as usual, we need to go through few quick guidelines just to ensure we have a successful meeting. First thing is that, wow, you can move to the next slide. Thank you. Just like this is an open event and we truly encourage participation. So we would love for you to have your cameras open, your microphones open, like make questions, comments, use the chat. So the more you put into the sessions, the more you get out of it. So really participate, don't be shy. But also keep in mind that we do publish these materials on our YouTube channel. All right. So just a quick introduction before presenting our guest speaker of the day. If you were here last time, you saw that we already started speaking about blockchains, stablecoins, Genius Act, and today we will continue towards this theme, more specifically on how to bridge this traditional finance with blockchain rails. And for that, we have Francis Sanchinelli with us today. Francis is the founder of Vudy and also the president of the Blockchain Association of Guatemala. He has led many initiatives towards innovation, technology, including the creation of Ethereum Guatemala. So Francis, thank you very much for being with us today. We are very pleased to have you here. And let's start. You are on mute. Yes. Yeah.
There you go. Yeah, so thank you, Fernanda, Lindsay, and Lautaro, the whole team. It's really a pleasure to be here. I believe we're just going to have fun in this next 30 minutes and just talk about what we're doing. And yeah, as you say, I'm from Guatemala, and it is really great to be able to talk to many of you. I've been following what the PCMI does and many coffee chats and other from many other projects, and it's really interesting to have these spaces to talk about what's happening and our perspective on what's going on the market. So, Lautaro, if you can help me out with the first slide, please. Next one. And yeah, so we're going to talk about Vudy, or however you want to spell it, because that's one of the main questions. It's like, how do you say Vudy? It's however you want to say it. It's like Google, Goggle, whatever. Just like Vudy, however you feel free to pronounce it. But it's just something related to the stablecoin and the whole cross-border hype that is going on the market. And what we call it is like
Voy un momento a buscar algo de almuerzo.
Please continue. Just muted the interruption.
Yeah. You can bring us lunch too, Armand. So yeah. So what is happening is like what we're trying to see and what we're trying to talk about is like from hype to future. And what we mean with this is like, it's not only hype that everyone's talking about stablecoins and cross-border and how to actually implement that technology on our enterprises, companies, institutions, or whatever, but it's also something that is going to happen. We know the certainty around it, and we've been seeing it in different use cases. And at the end, something that we've been doing with Vudy and what we're trying to build with Vudy is something that is actually global, compliant, and ready. And you're going to see through this conversation what we mean with this, what we're saying about global, compliant, and ready, and how we actually got to Vudy. So if we got to the next slide, Lautaro, I wanted to tell you a little bit about myself. As Fernanda said, I'm the president of the Blockchain Association, and my background in blockchain started roughly around 2020, 2021. I could say that I'm kind of a newbie in this ecosystem, but at the end, 5 years in blockchain, and these last 5 years have been really explosive, and everything is going on blockchain. But I wanted to tell you a little bit about how we started with Vudy, how we came to this moment. And it all started in 2022. I was in DevCon That's a big event for blockchain developers, for the Ethereum community, actually, where we gather. It was the first time in LATAM that it was actually really interesting for the context. There was this event going on in one of our countries. And I had the opportunity to go over there and talk to people, and my mind was just blown. My eyes were just open about how the opportunity to use blockchain for many different things was on the table, and not only about the investment side of what cryptocurrencies are or what blockchain is, but also what the technology can actually do. So after Bogota, it was in October 22. I started talking to some friends, and we founded Ethereum Guatemala. But the thing was already in my head, like, how do we build something that can actually come and position Latin America, and specifically Guatemala, that we're doing things with blockchain? So we started and we built U3 Tech. U3 Tech was the company that actually started as a software and technology company specialized in blockchain. We have the first business unit that you can see around here is the U Dev House. It was a dev shop. So we started doing software solutions specialized in blockchain for many different countries. We had clients in South America, in Europe, in Asia, many different sides of the world. And we started seeing, like, how do we actually put into action what we know about blockchain? But it came to one time in 2024, last year, that we had the need to start paying our collaborators and many other partners in different countries. So if we talk about the traditional rails and the traditional forms of doing cross-border transactions, we can go to Swift, we can go to a bank, Wise, any other opportunities and solutions that are already on the market. But we were having some different problems. So we started building something, and that's the story that we want to tell you about today. And we call it from the vision to the execution, because as you heard, we started saying U3 Tech is going to be the one that positions itself as the blockchain expert, and we needed to do something, not just build something from someone else, but to actually do something for us that we could take into account. So if we go to the next slide, Lautaro. So we wanted to pay faster, easier, and global. And at the end, we said, we are a tech company. We have the knowledge, and we already know how to do it. So why don't we start building something that could actually help more companies? We knew that it was not us, not just U3 Tech having that problem, because we started talking for some friends, but it was other companies that also had the problem to, how do I pay my partner over there? How do I pay for a medical consultant? How do I pay for a consultancy problems that is from the US and I'm in Mexico? I'm in Guatemala and I want to have some advisor that is helping me in Brazil. How do I make that transaction faster, easier, and just as frictionless as possible? So we started with a first solution that was trying to connect different countries and being able to say, okay, this is the solution. This is a payment link, actually, that was really easy to send stablecoins cross-border in a really easy way. Couple seconds, you can actually be sending your money over there. So we said, we can build something that is greater than this. We can build the whole infrastructure for companies to start doing things in their treasury and in their finance, and open more business models and more opportunities for the companies that are actually having international operations. If we go to the next one. So we already have the problem spotted. As at least for us, it was just like, okay, navigating these international transactions is already complex for us, for companies, because we have those high transaction costs. I don't know if you've seen some of your transactions where you use many other solutions. It's just like, sometimes it's crazy about sending $100, $200, even $1,000 or whatever to someone else. The whole commissions aside, everything is just really, really high. The process time was actually really slow. We do already have some partners and clients that say, like, it's not possible that I'm getting my money like 5-10 days after the transaction is made. So the processing times were already a pain in the market. And the regulatory compliance was also really complex. Nobody knew about stablecoins. And I think we were just talking about it off the mic with Lindsay. And it was just like, there's some chat around how do I make this happen? Is actually legal? Can I, as a company, go into using stablecoins just like a plug and play. What do I need to take into account if I want to use stablecoins and blockchain for my company? So the regulatory complexity was and is already there. The lack of transparency and tracing your money is also one of the main pain points. It was just like, if I send a SWIFT transaction, I don't know where my money is. If I'm sending out remittances, I don't know exactly what my money is until the recipient actually gets it and takes it out from the bank account or from an ATM. So we knew that there was actually a big pain that we could attack after we got that first need internally with U3 Tech. So if we go to the next one, there is like where we thought like we need to do something bigger. And I want to take this into now, because if some of you were in the last session of PCMI, I think Ignacio talked about what stablecoins and the whole ecosystem and the market was going around. And I believe this graph is really interesting for us because it tells a story about like a strategic story about how to read the market and to tell like, there are opportunities here that are actually opening. And it's not just coming from the hype of the stablecoins in this 2025, but it's coming actually from a whole roadmap of how the technology and how blockchain and stablecoins can work and give some value for companies. So I wanted to highlight the small green paws over there, because the whole story that I was telling you about how we started Vudy, it started around that time. We started between August and September to build a solution because we had the need. We didn't know that the Genius Act was going to come. We didn't have any, confirmation or certification about like, hey, Genius Act is going to come. But we knew with our expertise that something was going on stablecoins, and there was something that's going to be happening in the next years. So we started building it. And after, let's say, 6 to 9 months, we can see a totally different market. The whole ecosystem and everything that is going on is moving so fast that we were just on the right time. And that's one of the things that we call and we tell with our partners is like the timing in this industry and even the whole tech industry, but specifically in stablecoins and blockchain, is really important. It is more relevant than ever because things are happening from one month to another. We're having a lot of governments and a lot of institutions actually getting into this. Here is not what is happening in the US, but probably you've heard of them. MasterCard, Visa, all the big players are trying to get into a stablecoins market and the whole ecosystem because they know that this technology is going to disrupt the way we do traditional finance. And it's not just like one thing that is going to substitute the traditional finance, but right now it's already enhancing some of the treasury strategies, finance strategies. It's giving a lot of opportunity for companies that they are already working on the same day-to-day operations, but using the technology in their favor. So we're not saying that stable coins and the whole blockchain is going to substitute in the near future everything that we do. So don't be afraid on that side, but it's going to come. It's going to come gradually where more companies and more institutions and governments are going to be adopting, understanding what's happening with this ecosystem, and it's going to start doing and building more solutions around it. So,
Brandon, can I ask you a question?
Yes.
Yeah, I'm curious, the Genius Act was definitely a big milestone, and everyone has kind of said, just as you did, things really started to accelerate this year. Can you speak to, what exactly has the Genius Act enabled or done or made companies feel more comfortable? Like what's kind of specifically has that unlocked?
Yeah, and I would try to focus, Lindsay, on my side of the world. I would say in Central America, for example, and Guatemala.
Yeah.
The
What's the
Genius Act,
impact outside of the US, right? How are you guys feeling?
I think, the whole international, and I would take a part of the top tier layer for me is the whole international commerce. Everything is happening on dollars. Yeah. And there's a lot of commerce and international commerce going on with the US. And the US is mainly the main, let's say the main focus on, hey, how do we move money to pay for a client that is in Mexico? Dollars. So it's been going around what the dollar and what the whole US economy moves. So when you have some regulatory framework like this, like the Genius Act, that actually comes from the government of the US, it actually enables and gives the starting point for other governments to start talking about it, because they're like, hey, they having this. Is that something that's going to affect us? And that's the main problem that other governments are asking is like, is there something that we need to take into account because we need to involve it into the next strategy? Because right now, United States is going to be moving the whole money into stable coins, and we're going to start trading into stable coins. So what's going to happen? And on the regulatory side, everyone sees the US as one of the main and the core governments about regulatory sides of the economy and finance. So for example, in Guatemala, we've been working more than 2 years on a regulatory initiative to talk about virtual assets. We are pro regulation on the sense like we don't need to regulate everything. We need to understand what we need to regulate and why. But if we're going to regulate something, the whole ecosystem, not just the government, needs to take part of it. So the private sector, the entrepreneurs, institutions, everyone, corporate side needs to take part of that regulation. So we've been working 2 years now on this initiative, and the Genius Act just came to say like, I started having some calls from Congress and they're like, hey, we need to speed this up. Have you heard about the Genius Act? What do you think about the Genius Act? Is that something that's going to affect us in Guatemala? Should we get on top of it? How do we make it that something of value for the Guatemalans? So the whole
you had Guatemalan lawmakers contacting you to ask what's the impact of this? Okay. Interesting.
Yeah. And that's probably, and it's not just in Guatemala, because I know they've been talking to some friends and other blockchain leaders and all the stuff in Central America and the whole Latin America. They're like, okay, Genius Act is over there. We were doing this. How does this make some coordination between parties? And how does this affect?
Is it just me, or is Francis?
So everyone is asking
cutting
that,
out?
and I believe the whole regulatory side for me is one of the main pillars of what we want to do, and we as Vudy is one of the main pillars of, if we want to keep on scaling, we need to have regulatory clarity to be able to grow, because at the end you're building something that is a global solution. And that's why maybe MasterCard, Visa, and all the whole those big companies are moving not as fast as we can as fintechs and startups, but they're already moving, and these kind of regulations actually enable them to say, okay, we want to put more money in it. We're going to keep on spending and investing in it, and we can speed things up. So I believe it's a positive impact, and it got all the governments to just like, hey, we need to be alert because something's happening and we're not being part of it.
Right. So it's signaling to everyone, this is real, this is legitimate, we're behind it, we support it. Is there any aspect of the law, and anyone can answer this question, that is like a specific aspect of the law that has made an impact on you, Francis, or any comments on the specific aspect of the law that is good, bad, positive, influential?
I don't. Yeah, I'll give you just a few thoughts. Because one of the things is, before it was like an investment vehicle, right? And so with the Genius Act, it's now no longer just an investment vehicle. Now it's actually, its own a bank grade product. And some of the key elements. So who's in scope? It's banks are in scope, or any payment provider that wants to issue it, but they're all going to be kind of subject to banking regulations. So what the Genius Act did is create this kind of federal licensing and supervisory regime. So it's like kind of like setting guidelines and rules that everybody has to follow. One of the big risks with a lot of these stable coins out there is like, what's the assets that's backing it? And so with the Genius Act, you have to be backed 1-for-1 with cash and short-term treasuries. So it's kind of like high quality liquid assets. And then they're required to do like a monthly public disclosure of that. So there's like transparency and oversight onto the books so that the money's there. And then if somebody wants to be able to redeem it, so there has to be policies disclosed on how it's going to be redeemed. And I think there's like a window of time, like within a short window of time, where they have to have access to the funds. So
on-demand availability. Mm-hmm.
Yeah, and then it has to follow the regular banking oversight. So like the Banking Secrecy Act, the AML, the KYC and all those. So anybody who's issuing stable coins, they need to be kind of following like bank processes. So that kind of gives everybody confidence to, yeah, to adopt and move forward.
And I would say, Marcy, totally, I agree with you. That's one of the main three things that it got for the whole world is certainty and trust. It gives you opportunities and it gives you transparency. And that's one of the main things. And you can see it with big players. USDT, for example, Tether, the biggest stablecoin in the world, probably, they already launched their new stablecoin that it's Genius compliant, because they knew that right now they needed to be on Genius compliance. And what this does is what Marcy was actually telling about is it's not just banks now. It's not just the ones who actually knew about the technology and that were using stable coins. It now got to the family businesses, corporations, startups, entrepreneurs. Anyone is just like, oh, now I can do something that involves stable coins. And you can say that's international opportunities for any kind of business. If you have an app, now you can say, I don't have any limitations about how the process payment is going to be, because I could use stable coins and I can start moving value and money around the globe. So my app is not only local. So if you go to fintechs in Guatemala, for example, if you go to a processor, you're going to have like 3 to 5% commission on any transaction that you have. With stablecoins, you can be lower than that, a lot lower. And now you can not only be limited by the whole acceptance rates that the cards have, because you can be moving money globally. So you can have a market that is bigger. So this is actually giving a lot of opportunities and a lot of, more business models availability for anyone who wants to jump in. And I believe Juan Carlos has its hand raised. Juan.
Yes, I just wanted to jump in with maybe a couple of concepts. On the regulatory side, it is not only about the Genius Act, but how playing with that environment that is very connected with the USD as a reserve currency, as well as other regulations in Brazil and other places, those regulations will have a role to play, even if you want to facilitate really those flows that are around the USD as a reserve, as a paying currency. So that is one point on the regulation, that is still the Genius Act will be a core enabler, but other regulations will have to be there in terms of licenses and flows and regulation. The other point in regulation is that there are, for example, you see now the banks with the Genius Act, the major global banks, more oriented to see if what they are going to be doing in terms of being issuers, but also supporting really now all the management of the reserves, etc. So you see more and more those groups like the Wolfsburg group, which is anyway those big banks, trying to regulate how these services will be managed to control from the reserves and the rest of the flow in the environment. So that is a key point that is still happening. There was a recommendation from the Wolfsburg group about how to regulate and how to manage those services for issuers in that way. And the last point that I wanted to comment is, even with the operability of based on blockchain that is semi-decentralized or decentralized, still interoperability issues will be there. I'm not sure that with the pure blockchain technology, decentralized, all the issues from an interoperability in that environment are going to be solved. And there are still gaps there that even some other new players are trying to generate solutions for that. No, so I think that is also a point on contention that is still not fully solved. And I'm not the expert on this, but it's the kind of perception that I have from what I have been reading and studying about this. That's it.
No, thank you. I believe Daniel is already with his hand raised also.
Oh, good evening. Hello, everyone. There was a point made earlier about backing assets, and I was very interested to hear what people's feelings are about how, if there's really enough rigor in terms of the backing assets. I mean, it's one thing. One of the things we've had in the UK has been that the Bank of England has, and most of the regulators are coming down on the side of tokenized deposits, which basically means it's the bank that's providing a stable coin, But when it's a non-bank that's providing a stable coin, perhaps it's not the question is whether the regime around having the backing assets in place is sufficiently rigorous and has the right sort of level of checks. Sorry, that was a question.
No, maybe I jump in. I'm not gonna say that I'm the expert on the specific topic that you're talking about, Daniel. But I want to mention last week I have a panel where we talk about what's the future of the stablecoins, and we were just talking with banks, investors, and other entrepreneurs and big institutions about like, and in my opinion, it was like we're going to see a lot of stablecoins and many different things coming up, backed on fiat money, backed on real world assets, backed on many different kinds of topics. You're going to be tokenizing everything. You're going to see 12 months of everyone trying to tokenize everything and being able to enable that to a global commerce, to give access to anyone who wants to access to it. But I believe I can actually try to mix your question with what Juan Carlos was saying. Is like, we are still in a really early stage of how the regulatory framework is going to work. So right now, everyone is just trying to adjust. And I would say that in the next 12 to 18 months, what we're going to see a cleanup of the stablecoins that are actually working and a cleanup of what are not working, because they're going to be compliant. They're going to have any demand on the stablecoin. We're going to see volume transacting over there, and we're going to see congruency of what they're doing with their assets. So I would say that, yeah, it is kind of difficult to understand how the banks are going to actually make this. They do now know how to do custodial. They could tokenize everything they have. That's their main activity right now. And we're seeing that. I was just reading a news right now in Spain, and they're already selling and buying crypto. They're offering the services already. It's not custodial, but they're already getting into the exchange kind of model. So we're going to see a lot of stuff coming up in the next 6 months under the regulatory side because of what Genius did. Everyone trying to adapt, to understand, to be able to, let's say, interoperate with what Genius and the whole US market is doing. But we're going to see a lot of other opportunities that many other countries and continents are saying. Is like, okay, so now that we have this and that we know the technology is coming, how do we make sure that we can have control? How do we make sure? And it's kind of the opposite of what the technology of blockchain says. And it's, for me, that's kind of the really interesting side, because blockchain and everything wants to be decentralized, and you want to be private, and you want to have privacy in what you're doing. And the governments and big institutions now are going to be trying to push a whole strategy, and at least that's in my opinion, how do we not lose control of what we already had? So it's going to be an interesting times on the next months of saying, this is the regulatory framework, this is actually working, these are the players that are actually doing things right, this is something that we're not in the risk. So we start playing around, and it's going to be like 1 year and a half about seeing what's happening, what's working, and what's not. Marcia.
Yeah, just to add a little bit more, because like in the UK, like in Europe, they have regulations like the MiCA regulations, which talk about kind of the quality of reserves and the governance and risk. And I think like what Francis is saying, like because we now have like more and more regulations in place, like the Caribbean, they have DARE, you have MiCA, you have like every country starting to establish these, and and Tether, like Francis mentioned, right? They established a separate, because they had high risk assets, right? Like they weren't backed by quality assets. They did a lot. They were associated with a lot of like pig butchering. So in order to stay relevant in this new world where you have all this regulation in place, these fintechs are going to need to retool and comply with these regulations if they want to stay relevant. Otherwise, they're going to become obsolete. So now that these regulations are in place, these fintechs are going to need to start building practices, because at the end of the day, a lot of moving money is about trust, right? Like if you want to get the business, if you want to earn the customers, you're going to have to earn their trust. And in order to earn their trust, you're going to need to comply with regulations that are accepted by the industry. So as this grows, everybody comes aware. It's like, oh, there is this regulation that's going to make sure that my money is okay and blah blah blah. So I think and I think that's part of the rolling stone, this gathering of energy and momentum, is that fintechs, the winners are going to be the ones that are complying, and the losers are going to be the ones that are doing their own thing.
Yeah, and maybe just, Daniel, give me a couple of seconds, because I want to roll down to the next slide, Lautaro, to the couple of next slides, and to tell and answer what Marcy is saying. Because, yeah, what we've been doing is that we started validating this years ago. It was not just from, and I got the pause, but we were in Japan, in Asia, in Europe, in many different countries, talking about with institutions, with local players, with builders, protocols, and anyone who's like, what's coming? What do you need? What are the fears of your institutions? We were in Hong Kong. We were already in London. We were in El Salvador, of course, because we were talking to them like, how does it make sense with what we're doing in El Salvador? And we started validating that there is a lot of opportunity. Yeah, and there's something that is going to be happening. So the whole fintechs, if we get to the other slide, Lautaro, as you said, we need to take that into account. And I want to say a couple of things right now. Is if you see Buddy, it's a Saint Bernard. It's from Switzerland. It's a really cute Saint Bernard that we want to take the whole complex thing about blockchain into a really friendly face that helps you, is robust, and you can actually trust him. Because you said one question, and we've been talking about it all around in this conversation. It's like moving money, doing tech, and using other things is going to be around trust. And we saw that there were a lot of products that were not suitable for every company's need. So we said, like, why don't we build an infrastructure that actually companies can use and build on top of it? So we had this first need. So how do we make this amplified? How do we make this as deeper as we can to actually enable other companies to lower their go-to-market learning curve, to have the technology working over there, being compliant, being secure? And if we go to the other slide, as what we're saying is we want to be the lovable of fintech on chain. You want to build your own Venmo, do it. You want to build your own deal, do it. Do it for your niche as your compliance and your regulatory framework lets you do it. You want to be PayPal, do it. There's going to be a lot of opportunities. Now you can build your own. And that's what Web3 and stablecoins and these kind of new opportunities and technology actually enables. It's like we want to be able to tell everyone, like, you want to do this. We know that there's fears. We know that there are compliance topics that we need to take into account. And if we go into the next one, we are compliance first company. We are compliance first. We build many different models. You can actually connect to anyone that you want, build on top of it. If you want to request money, if you want to send money, you want to do payrolls, you want to have the ramps, because that's one of the main issues around there. It's like, how do I actually get out of stablecoins? If I need the USD money, if I need quetzales, if I need pesos mexicanos to pay to my, because the ecosystem is not there yet. We cannot go to any place and pay with stablecoins. Probably us and the ones that are in the ecosystem, we can do it and we know how to do it, but others don't. So there's still a gap and a window of companies getting in to build a lot of solutions that are going to be growing next to the regulatory framework and to the compliance framework. And if we go to the next one, what we are building, and I believe that's the main value proposition of Buddy, is like we have this Buddy ecosystem network. It is compliance first, and you can say it over here. And I want to have the chance to talk about, I've been talking to banks. Doing the KYC and KYB with artificial intelligence and everything that's going on, it's every day a little bit more difficult. And it is also expensive. I'm probably going to be sharing you, Lindsay, a podcast of Michael Saylor and the CTO of Coinbase. They talk about tokenization and everything. It's really, really great. But KYB and KYC, you want to be compliant. But the whole thing is going to be, how do we trace the transactions? How do we trace the addresses that are actually using this stablecoins and this technology? So we actually also implemented the KYT on our process. So every time you get into the Buddy ecosystem, you're going to be able to move from one end to another. It's not a P2P. It's not account to account. It's just, I want to move money from my bank account to a card. I want to move money from an OTC transaction to a cash point. I want to take cash and take it to a wallet, to the fintechs. what do you want to do? There's an ecosystem and there's a technology like the switching point of Web3 that is going to be enabling you as a company connected to your ERP, connected to what you're doing, connected to your bank, or whatever you want to build on top of it, to be able to move and access those ramps. Because at the end, still, we're going to have more years that fiat money is still going to be there. We're not going to substitute that in the near future. Fiat money is going to be there. But we need to start converging. It's going to be simultaneously growth about how stablecoins work, how do we pay merchants, how do we go to a coffee shop and pay with a stablecoin, and how do we actually do payroll with stablecoins. And then it's going to be one time that you're going to need quetzales for something else. The ramps needs to be there. And that I believe is one of the main pains, and that's why we're doing Vudy as we're building it. It's like there are so many opportunities to enable with other players that are already in the ecosystem. There are a lot of convenience stores, there are a lot of banks, there are a lot of retail stores that could actually work as ramps, as on-ramp and off-ramp. If we can connect them and be the biggest aggregator in the world and enable this for anyone who wants to use it, that could be something that actually enables the new economy, the new transactional and interoperational economy, because that's what we're trying to build. We're trying to say, okay, don't worry where you are, don't worry where your business is based. You can have clients in Africa and be a Guatemalan business. It's going to be working 24/7. You don't have any problem on scheduling a transaction and an international settlement because it's going to be working on chain. It's going to be doing stablecoin benefits, but it's going to be compliant. Don't worry about it. We know. I know the banks and the government is going to be asking about compliance. It's going to be compliant, and you can access to it. Can we move to the next one?
Quick question before you. What is the KYT? Like, that's the first time I've seen that. What is that?
It's know your transaction. And what we do with that.
Know your transactions. Cute. I think you just coined a new acronym for us.
Yeah. And you're going to be, I said that I'm going to start writing a book of the whole acronyms that we hear in this world. But it's because there's know your transaction, there's know your address, there's many different things. But at the end with this,
I love it.
I love it. Is we connect the wallet, and we know because of the hash and the keys on every wallet and every transaction, we know where the money is coming from and what it's going for. So we can have a risk score and understand actually if there's something that is not right, and we can actually parameterize and have the parameters to say, I'm not going to be accepting transactions that come higher than an 80% risk. It's too difficult for me to accept that money. So it's actually really interesting. And those are the main topics that the banks are worrying for. They already have the KYB and the KYC, ruled for years. That's what they do. If you go to a bank, they say, like, where do you live? Where do you come from? What do you do for a living? They already know that. But they don't know how to actually do the forensics, the traceability, and anything that is happening on chain. So with this, we're moving on to on-chain transactions. We need to take a lot of cautious with that. And this is something that I just wanted to take you, the big opportunities there. Trillions of dollars for cross-border payments market, a lot of volume going into the freelancer economy and growing year over year. And you can see there are a lot of businesses seeking for global transaction solutions. So if you just think about these top tiers opportunities over here, payments, international commerce, remittances, intercompany, treasury management, freelancers and consultants, there's a lot that is going to be happening. And you see that this is going to move the needle on how the economy and the whole banks and treasury and liquidity moves around the globe. We can go to the next one, Lautaro, because I believe we have just like 5 minutes more. You tell me, Lindsay. And that's what we build with Vudy. It's like Vudy wants to enable others using our infrastructure as a service. It's just like we're the lovable on the building side, and on the business side, it's like we're a do. If you want to be a part of us, just get here, use the technology, have the license, whatever you want to build, use it, and there's going to be a lot of opportunities and fees, OTC and payments. The volume is going to be there. Volume is moving already to the stablecoins, and I believe Ignacio talked about it on his last session and how the volume is actually growing on stablecoins transactions. It is already going there. You can have FX and yields. Everyone, Daniel, probably going to you, I believe you're more on that side, is there are a lot of yield opportunities for more products and new products for banks and financial institutions, because the whole thing that is moving on stablecoins is going over there. And there's a lot of memberships, and what we do is we have a membership for different type of clients that we have. They have the business client, or we have the API client who wants to use our infrastructure, and they can actually use it to start moving money around the globe. And yeah, it's been quite a ride. It's been really interesting and a bit faster than we would love. But at the end, it's just like every month to month, something's happening, and we need to be able to pivot or to be able to be there to start fixing and adjusting to what the regulatory framework is doing. And if you go to the next one, Lautaro, for now, we just launched it. If you remember the pause, between May and July, we already have more than 500 subscribers. There are already 3 products being built. One is actually in the UK, Marcia and Daniel. They did a payment solution, using our infrastructure. There's another one doing a remittances solution, using our infrastructure, and another one going into InsurTech for payments, using our infrastructure. There are a lot of transactions going on there. We are a B2B focused kind of product. So it's going to be less transactions, but a lot of volume, and there's where the opportunity is. And we're trying to just validate the previous cases of what Vudy is doing. The freelancers, the intercompany,
Y te voy a mandar, creo que es una serie ahorita mismo.
The remittances. Juan Carlos, I believe you had your hand raised.
Yes, one of the points that I didn't comment earlier is in terms of the business model, because all this infrastructure in custody services, etc., but it then can put the transactional cost much cheaper. Then it needs to be funded and covered in terms of overall cost. And the whole thing on the business model at this moment is where the ultimate pool of revenues is coming, which is the profitability of the reserves in the end. And everybody's in some way is eating from there. Not really. It's the main source for the business model. So the key discussion here is how issuers that are the ones who are supposed to be receiving that pool of revenue is really distributing, and the level of discussion that there is today, even with the major banks, global banks at this moment, that they are the ones who pretty much paying the interest for the reserves, but then the issuers redistributing that by rewards and not by interest, because by regulation they cannot pay interest on that. So the whole that discussion about the business model and how regulation is going to be ended up facilitating those rewards schemes or not, that eventually is going to be important point. I would like to understand what are your thoughts about that, because it's a very pretty big discussion in the end, because that is the main source of pool of revenue for everything, pretty much. Am I right?
Yes. Lautaro, we can go to the previous slide, please.
Yeah.
There you go. Yeah. So what we saw, Juan Carlos, is we saw something different, focus on product for ourselves, because we were a tech company. So as a tech company, we said, what can we do? We do tech. So we can actually try to focus on having the best product possible, the best solution and infrastructure. And we could have some memberships going on over there. That's the main business model around it. It's like pay a membership, use this license, do whatever you want to do. But at the end, when we started using this into the market and seeing how everyone is doing it, the OTC and the payments is still going to be a lot of volume. And that's something that we were doing is you're not going to pass from a 5%, 4%, 3% on our region, for example, because I believe in the US it's totally different, the inter-exchange rate for the credit card payments. But here, if you pay with a card, it's going to be like 3 to 5% transaction cost. With stablecoins, you can have less than a 0.25%, and it's going to be profitable. And if you have the volume, it's going to be something that actually works. So it's going to, I would say, and that's one of the popular words in this ecosystem right now, is going to democratize how you access to the payment and other business model solutions. Because you can now say, I'm not going to focus, and that's our vision. We're not want to try to focus on the transactional cost, because I believe the transactional cost is going to be going up to zero at some time, because it's not going to be there. The revenue and the value is not there. It's going to be in any other products, DeFi, collaterals, yields, lending, issuing, going into other different kind of business models that the companies are already going. And now that you're going to have access to a global market, it's going to be totally different, and you're going to have more opportunities. Yes, right now, and I would say a specific case, for example, in remittances, everyone is going to remittances. Guatemala, I don't know if you heard, Guatemala, 22% of the GDP comes from remittances. It's more than $25,000 billion of volume a year. It's crazy, the volume of remittances that we have. So everyone's going over there. What's happening? More than 80% of the volume of remittances, it's paid and owned by two banks in Guatemala. Would you say that it is possible for a fintech like us to go and actually compete to them with the infrastructure that they have to be able to pay it out? Probably not. And everyone is trying to go like, okay, remittances is now going to be just $1 remittances. That's the cost. There are still many different, intermediaries between a remittances and traditional remittances going from one end to another end. With stablecoins, you can do it as fast, as low cost as possible, and you can actually compete. And probably the banks are going to be using the tech. They're already doing that. The main bank in Guatemala is already claiming to use stablecoins as their backbone to start moving some remittances to a specific app. So the business model are starting to come from the earth and just grow, and companies are getting creative. How do we actually take more of what we can do with stablecoins now? I would say the FX and yield is even more efficient than having someone trying to buy and sell dollars all day, because companies and banks already have that. They have people negotiating that on the morning, midday, and end of the day. With this, you can have artificial intelligence, AI agents moving your money, selling and buying stable coins, and having the benefit of the yield almost live. So there's going to be a lot of many other opportunities when you can actually start building new products and offer them to the market. I would say it's going to need more adoption. It's going to need more maturity of the market to actually understand, and the whole infrastructure of the ecosystem, wallets, anyone, people who actually accept stablecoins to be able to develop more business case and tell them, hey, now it's not going to be this where I'm going to be having the revenue from. It's going to be on the other side. But now the user is not going to feel it, because I'm going to be having money on what I'm doing with the yield in the US, or what I'm doing with the trading things or lending products, and it's not going to be transferred to the user, to the end user transaction. So it's going to be evolving, and I would say that's something that we need to be really sensitive about, but it's going to be growing from month to month to understand where the revenue actually comes from. Right now, if you want to issue a stable coin, it all comes from the yield. You have the money planted over there, and that's the back, and that's what you're having. Because you want to do a stable coin. You don't want to be changing the whole price of what you're selling. So I would say it's going to be really interesting for the next months, and I don't know if that's something that you actually agree on.
Yep, totally. Thank you.
Francis, I have a question. If we go back to one slide forward, can you talk to us a little bit about the products, the use cases, the adoption, like what's been working, you mentioned you were in Money 2020 in Amsterdam. Like when you talk to people, what kind of use cases, or, what do you think is either has or will gain traction with this fastest?
Yeah, I would say, again, they're talking about remittances. That's the best use cases that everyone is trying to go into for stablecoins. But at the end, payments is one of the main ones, and investors are already really interested in payments because, as I was saying, there's a lot of benefits and revenue opportunity over there.
What kind of payments do you think?
Classic payments. Even looking at, for example, in the UK, they actually built a solution to go into a coffee shop and to go into a merchant, whatever, and pay with stablecoins. It's going to be really fast. And you actually, if I could do it, I can send you a demo. You can just go there and scan a QR code, and you are going to be able to pay with stablecoins without any friction. That's something that it's really cool.
But for you guys, your platform, is that a use case that you're seeing? Okay.
Yes. And we're also seeing the payroll. We're actually talking to BPOs, call centers, that they have a lot of thousands of collaborators around the whole world, and they want to do more efficient payments on the payroll. So using stablecoins, and for example, our infrastructure, it lets you pay hundreds and thousands of people in just one click. And it's not going to cost you each international SWIFT commission for each one that you're paying. It's going to be just cents on a dollar. So it's really more efficient for them to actually use these kind of products and infrastructure to tell them, hey, here's the best version of the payroll. It's already done in seconds. And it's more time efficient for companies. Other use case that we've been doing is we have an escrow that it's a model that is on the back end of Vudy. And this escrow actually enables a lot of things. For example, on international commerce, if you're buying a machine from, let's say, a country in Asia, you want to guarantee yourself that the machine is the one that you actually wanted. So you have one people over there, you have someone over there probably or not, or you want to just make sure that it's the machine that you asked for when it comes to you in Guatemala. You can have an escrow that already certifies that the money is there. It's going to lower the cash flow and the time payments, the thing. And if you actually accept that and the terms of the smart contract is already settled, the money is free. So that's where it actually works to be able to do this kind of new debit notes for international commerce. So imagine that for companies that actually buy supplies from other companies, for startups that actually sell things on the Facebook marketplace, and they send things. I have my nephew that actually does that. He sells toys on marketplaces, but he has some problems sometimes because he sends the toy, and when he gets to the place, the people is like, no, I don't want it. And he's in charge of actually paying for the logistics and for the delivery and everything, and he's getting the toy back. You can actually do an escrow on that and tell them, hey, if you want to have it, at least I'm going to charge you something because you make me lose some time and work. There's a lot of things that is going to be happening with the smart contract technology that is embedded on Vudy. And yeah, we've been exploring many other different use cases, mainly for B2B because we're focused in companies and institutional volume. But for the retail and the B2C side, there are a lot where you can build on top of.
Got it. Cool.
I believe Daniel has a...
Daniel probably should go first. After Daniel goes, I want to go.
Oh, sure. I mean, I don't want to, I'm not going to be like all down on this. But the thing about the coffee shop use case, and it's not necessarily just a thing in the UK, is that the really big problem for SME merchants, certainly in those cases, is the thing that really costs them a lot of time and money in payments is reconciliation. I mean, hours a week. And what they really don't want to do is spend a lot of time reconciling stablecoin payments from a load of different systems because their accounting systems aren't going to handle it, their processes aren't going to handle it. It's one thing to put the payment solution in, but it's not a complete solution. And so I would just sound a little bit of a note of caution about just going beyond the actual payments to the entire use case, because it's got more than payments in it.
And you're totally right, Daniel, and thank you, because this is something really important. Lautaro, if we go to the previous couple of slides, go back into the models, back, that's going to work, but back, there you go. That's why we already embedded a model that is called OTC and fiat ramps, Daniel. So when the SMEs, they get the stablecoins, they don't know how to do with that, and they don't want to know what to do with them. They just want their money. It's going to be already appified, and you can actually just send, hey, convert this into pounds and deposit it into my account. And that's going to happen in one click. So the whole reconciliation
the question I have about that would then be, how are those rails going? I mean, are you talking about the card rails, or are you talking about the interbank rails?
Again, you have that on your wallet. Remember that when you're talking about stablecoins, you're going to have it in your own wallet. It's going to be a custodial wallet, and you're going to have it on yourself. So when you just well,
then it's not going to be in your bank account, is all.
No, but you can go to your bank account, because that's where the OTC services come. I don't know if you've done an OTC transaction one time, Daniel.
No, But
okay,
there isn't all the way that's not the whole end of the chain, is all I'm saying, in terms of how the fiat ramps work. But I totally get what you're saying.
Yeah, and I just wanted to show this. This is a card what I have when I can consume my USDT or USDC balance, and I use it to pay. I just charge it with Vudy. I get it over this. I have the card, and I can go into any POS because this is Visa backed, and I can actually convert it. And I don't have any. The FX is really good, and it's something that I can use globally. So I'm actually moving myself with stablecoins around the globe, and I can actually go anywhere and pay with stablecoins. What happened to that merchant? Visa is taking charge of that conversion and that settlement and converting that into their own local currency. And that's why it is important of MasterCard and Visa getting into the ecosystem and playing around into the playground, because the whole settlements and the whole ramps are already being enabled. So that's something that is going to be really interesting, because, of course, Visa and MasterCard are going to probably charge a little bit more of what other fintechs and startups can charge, but the solution is coming.
Cool.
I had a question on kind of like the liquidity, because you were talking about the payroll use case, right? So in payroll, like a company will have, maybe they'll work direct with their bank, or they might have a payroll intermediary. Those funds need to be made available, and then they're dispersed to the recipient. So like when those liquidity, so where does those liquidity funds sit for these disbursements? Like, are the businesses going direct and like loading them on the stablecoin network, and then they're going out from there? Or is there some sort of like closed loop network where I don't know, I guess maybe there's always like some sort of pre-funded that's always, like, how does that liquidity piece work in the payroll equation? I mean, payroll use case.
Yeah, right now what we're doing, Marcy, is like companies have their money, let's say quetzales, they get into stable coins, they convert it into stable coins, and then they have already that liquidity onto their wallets. And when they want to start doing the whole dispersion, they just use the platform, they send the money. And there's what the interesting thing about, if you can go to the Vudy ecosystem network slide, Lautaro, there you go. Then is where this comes in, because they're going to be paying, and the collaborator, the employee, is going to say, I want it in my card because I can actually use it. I don't want it in a bank account. Or you know what? I want it in this wallet because I'm using, let's say, Revolut wallet, and I want to use my salary that comes in stable coins. I want to use it with my Revolut card. It's going to be going over there. So the companies right now, and the general flow that we're having right now, is companies convert that into stablecoins. They have liquidity into stablecoins, and then they do the dispersion for payroll. There's an opportunity, and that's one of the things, and like probably phase 2 that we're trying to build on top of, that we're saying to the companies, hey, there's a DeFi opportunity for yourself. If you need to pay every 15 of the month and the 30, there are 15 days. If you're liquid in 15 days, being on stable coins, there's a lot of opportunities to actually go and have some extra yield and revenue from being in stable coins. That is faster when you can actually get in and get out, that you could actually not access in the traditional side, unless you want to go and buy stocks and sell them and be shorting everything and blah, blah, blah. It's more complex. But just being on stable coins and going to a liquidity pool, you can actually go there and have some extra revenue of having your liquidity on stable coins. And then on the 15th, you get out, you have your stable coin, and you use that money to do the dispersion for your collaborators.
And so we're starting to disintermediate. So is there a role for banks in that scenario? Because, right, historically, all those payroll funds are being held by banks, and you would get your interest, or you would do your sweeps between your accounts at the bank and maximize. So is this something where the bank, like if they want to stay relevant, they would open their own wallet and they would purchase the stable coins, and then they would sell those stable coins to the business to help them manage that global payroll? So that would be the role, ideally, that the banks would pay if they wanted to stay relevant in that equation.
I would say that is, and that is what's happening with the bank that I told you about in Guatemala. They have their own wallet, and then they are now looking and exploring to accept and have stablecoins balance on that wallet, but it's going to be their own. So they're going to be able to tell you, hey, there are some opportunities here. Don't get out. Don't move that into fiat and paper money. Just stay in the ecosystem. Use the stablecoins that we already have. Move that. Pay your services in this. Pay your services in that. Access to this new opportunity and product. So banks are still going to be relevant in the next years. I would say we're not going to be able to substitute banks. That's not the purpose of it. It's like the banks understand that the stablecoin and the blockchain technology and everything that's happening is coming, and they need to have a step in and tell, this is what we know how to do. We can be the one that actually do the custodial. That's something that we already done. We can actually enable you with opportunities and credits using your stablecoins or crypto assets as collateral, so we can do something to you, and then we can start playing around it. And here are the cards. This card is already stablecoin backed, so you can use your balance that is in my wallet to pay using stablecoin. So banks are going to be there, and that's one of the things. And I think it's a really good question, Marcy. It's like, why we built Vudy the way we built it. It's like we didn't want to be an acquiring license, and we didn't want to be a custodial. We're just tech, so we're the one actually connecting people. And that's one of the ways that we can actually be global as fast as possible, because we don't need to be having the problems of, I need a license to be able to get fiat from someone else. That's the partner doing that in that country. I need a license to pay out to have the custodial of the crypto. That's not me. It's going to be probably a bank, an exchange that already has the licenses to do that. So banks are going to be stepping in, and I believe they're already exploring it. They're going to move slow, because that's how they move. But they're already exploring it. And actually, we have, in a couple of weeks, we have a session with a bank to explore what are the opportunities of new products for them, to tell them, what do you want to do? What's your portfolio? What's your vision around your bank? How do you want to get on top of this? And we would say, this is something that could actually work. This is compliant. Everyone is on board. Yeah, let's do that. So banks are already doing it. And I would say they're always going to be here. They're always going to be part of the whole ecosystem, because I believe the financial inclusion for countries as Latin American countries and any first world countries too is just like, it's going to be there. The first world countries is going to be easier. The whole ecosystem and interoperability is going to be faster. And for the Latin American countries and the financial inclusion countries, opportunities like us is something greater, because we're going to be actually onboarding people from crypto to the financial ecosystem and tell them, hey, now you can use your stablecoins to do this. Probably you didn't have the opportunity to get some lending on the traditional finance world, but in crypto, you can, because you have stablecoins, because you have virtual assets, because there are more opportunities. And this is something that is going to be actually really relevant.
Thank you, Francis. We are out of time now. Lau, if you can put our last slide so people can the other one. People can contact Francis, because I know this team has a lot of discussions and questions. So here's the contact. Feel free to try to talk to him, LinkedIn, everything. So yeah, I just want to really thank you guys for being with us, and see you in 1 month.